Good afternoon, everybody. Welcome to another exciting episode of Breaking Bitcoin, recorded live here in the studio. It is Wednesday, October 23rd, 2019, foul year of our Lord. My name is Justin Wise, lead analyst and senior mentor at CrackingCryptocurrency.com. Hopefully you guys are doing absolutely fantastic wherever you happen to be tuning in from across this barren wasteland of a planet that we call a world. Slightly bearish momentum and sentiment this morning. And I hope you're doing well. And it doesn't matter whether you're watching us across YouTube, Twitch, DLive, Facebook Live, or of course on Roku with our friends, the Investor News Channel app. If you would like to support the show, make sure to subscribe and hit the notification bell if you're watching us over there on YouTube so you don't miss an episode, because we are here every single day. And if you're watching us on Twitch or DLive, make sure to click that follow button and consider giving us a subscription as well. Don't really know what to tell you over there on Roku. Bookmark the channel because that is a good one, the Investor News Channel. I usually have it on the TV while we are trading during the day. Now, today's episode is brought to you by the Cracking Cryptocurrency Premium Trading Group. If your goal is to be a full-time professional trader, if your goal is to earn money on the side as passive income, or if your goal is to take control of your retirement and seek the path of financial freedom, then make sure to head over to premium.crackingcryptocurrency.com and work with a team that deals in the realm of statistics, approaches the market with a probabilistic mindset, works with verifiable edge, and teaches individuals how to build strategies. Again, that's premium.crackingcryptocurrency.com to push your skills to the next level with our community today. We've got a fantastic show for you. I don't even know where to start. Obviously, quite an exciting day in the market. We're going to break it all down. We're going to look at the altcoins. We're going to look at the majors and the dollar pairs as well. And we're going to look at a couple interesting points of data that I've been looking at recently. But really, none of that is necessary because we can see the direction of the trend. We were talking about this for quite a while, so we're going to break it down. But first, I want to thank this month's crypto comment giveaway sponsor, Spectre Security Coin. Make sure to go check them out at spectresecurity.io. Let's not waste any time. Let's head over into the live scene, give away some crypto, and start breaking down today's market with today's Breaking Bitcoin episode. Let's go. All right, so here we are. We're going to go over here and load comments for yesterday's video. And yesterday's video is up in two parts. If you want to catch yesterday's video, make sure that you watch part 1 and part 2. Really, really good episode. I think specifically if you're interested in the fundamentals, the second half of the first part and obviously the second half, which is only about 20 or 30 minutes long, really fantastic show. Thanks guys for coming out for that. We're going to randomly pick a winner. And I'm using the first video. There's about 5 or 6 comments on each video, so I didn't know which one to pick. Obviously, it won't let me pick from both of them. So anyways, Ricky Thompson, thank you so much for the comment. He says, you're late for the live dump on the show. Can we get part 2 while you're on? Well, here we go, my friend. We're ready to rock. So get a hold of me in the Discord, Ricky, and I will tip you some crypto. Thank you so much for supporting the community, my friend. All right, over here in the live scene. Let's see who we got in the chat this morning. Let me give a big shout out to all you guys. How are we doing? Minister C Politics, Victorian Violet, MT Coiner, Ali, Dark Rico, It's Hard, Treese, Crypto Comedian Treese. What's up, my friend? Bob the Builder, the one, the only. Saintsy is in the house. You go chill. We got Ferguson, we got Cryptonomics, and the one, the only Eli back. Good to see you, my good friend. All right, let's break it down today. Okay, now obviously you don't need me to come on the show and tell you that we've got a glorious bearish candle. We're going to start looking through the lower time frames and on the daily. But the interesting thing, and we'll just start from the beginning as we are prone to do, is on the, and we need to juxtapose this because again, there's no point in me coming on the show and telling you what you already know. You guys already know that Bitcoin is bearish. You guys already know that Bitcoin broke down. You guys already know that Bitcoin fell through support. So the question is, what do we do now? What do we do now if you're in position? Are you looking to take profit at this point in the area? Obviously the answer is yes to that, at least partial profit. You set your stop loss to break even, you let it ride, potentially put on a trailing stop loss. Where do you enter into a position? Is this a position you should counter trade? Should you be looking for a long, as this is a tap into a demand zone? This is the 7.4 area. This is the 7.4K area that we were talking about again. And again, I'm not here. You guys know how I do things. But listen, I can't help it. I'm a human being. I'm a human being, and it does feel good to be vindicated. It does feel good to be justified. And that's that kind of thrill that sometimes we chase as traders. And I'm not immune to it. I've been doing this for a very long time. But when I come on air and I make, and I point numbers out, and for those of you who regularly follow the show, you guys know I do not like putting lines on my chart. And actually, there's no lines on the chart right now because every time I show an example with drawing tools, then I just right click the chart and click remove all drawing tools, because I typically do not ever put lines on my chart. There are some charts, some longer term charts that I do have, significant levels of demand on. For example, Litecoin being a good example. I am continuing to buy Litecoin at this area. I think that Litecoin is a screaming buy at this area. Again, not financial advice. Do your own research your own fundamentals. The conclusion for you might not be as substantive, but Litecoin's really the only one that I can point to right now and be like, bam, look at the level that it's at. This is a level where 6 times we've had 100% corrections from. You got to buy that level up. And because I also think that Litecoin has good fundamentals, it's one of the strongest coins. But moving on from Litecoin, talking about Bitcoin, as we said, I only had 2 lines on my chart to the downside. I talked about 2 targets to the downside. I talked about 7.4K and I talked about 6.4K. Those 2 levels juxtaposed. And again, not to call out any other traders or say anything negative about anybody else in the space. But again, usually, I've done the rounds here on the YouTube traders and on the crypto Twitter traders. And the sentiment over the last week or so has been unbelievably bullish across Twitter, across YouTube. Seeing most of the accounts that I follow and most of the people that I talk to on Twitter and most of the people that I talk to who are also content creators here on YouTube, overwhelmingly bullish. Most of them talking about, catching the dip, taking price long, looking for a breakout to the upside and all of these things. And consistently not flipping bullish, consistently not changing my tune, consistently saying the exact same levels. And it feels good to see this price action come down and tag 7.4K. So now the question is, and obviously for you guys and for myself as well, where do we go from here? So the first thing that we need to do is not look at anything subjective. We don't look at anything subjective. We're going to look at our default system, or at least I'm going to show you the system that I use for displaying on the stream so that you guys can follow along at home. And of course, I want you guys to be making your own trading decisions based on the strategies that you are building. I never, ever, ever want anybody to come and watch the show and hear me say something that conflicts with the signal that they're getting from their strategy that they've put their time and effort into building and decide that, well, Justin knows more than I do. He's a more experienced trader, so I am going to ignore my strategy and take his signal. You shouldn't do that for a couple reasons. First off, in the premium group, I do provide signals, as do the rest of the analysts as well. I want to give a big shout out to Epistemic Crisis, one of our analysts and traders. He had a fantastic month last month. He's having an amazing month this month. I am absolutely blown away. Obviously we've been trading together for quite a while now. And he's one of my closest friends. He's one of my best friends. And I'm continually blown away by his wisdom, by his patience, by his knowledge of the market. But you have to give credit where credit's due. And Epistemic, my good friend, you are crushing it. You are absolutely obliterating it. So, and I don't know if I say that enough. I don't know if I tell my team how much I appreciate them. So this is a huge shout out to all of you, everybody who's helped me out. Even Saintsy, who has helped out with the thumbnails. Big shout out to you, my friend. Thank you so much for coming in and plugging that gap. Much appreciated. You guys are all absolutely amazing. All the guys in the group, everybody that comes forward and provides indicator data that contributes to the public databases that we have for the premium group. Everybody that posts their own strategies. Midwest Attempts, Trunker, the guys who help out with the free analyst channel. All of you guys are absolutely amazing, and I'm blown away every single day by your dedication, your hard work, and your persistence in this space that we're in. So thank you guys so much. It's not me, guys. It's all of you who make this all possible. So thank you. So with that being said, and kind of returning to that point, I never want you to come on the show or come watch the show and go against the strategy that you've put the time and effort into. Okay. I would much rather you, again, as I said, there are times when I get a signal to take a trade, and other people, of course, who have built the same strategy, not the same strategy, but using the same methodology to build their trading strategy, they're going to get a conflicting signal. And I want you guys to take your signal, because you're the one that's put the time and effort into your system. You haven't put the time and effort into the exact indicators that I utilize. You haven't put the time and effort into the exact nuances of the way that I trade. And of course, I'm here to provide guidance and wisdom and education and knowledge and fundamentals. But when it comes to trading signals, and that's the point. We trade based off signals. We trade based off when our technical strategy tells us to go long or tells us to go short. We have filters that reduce losing trades, and we have volatility filters that allow us to know when there is attractive volatility to actually take that trade and have opportunity in the market. When all of those things come together and you've gone through the steps, when you've gone through pathways to profit, when you understand how to build the strategy, I want you to take your signal on whatever time frame you've optimized your trading strategy for. So with that out of the way, let's go look at Bitcoin and make some ideas about what we want to do. So obviously Bitcoin breaking down from this level of consolidation, again, plunging down to 7.4K. I do not, so let's just get this out of the way. I am biased to the downside. I do think that we actually get more continuation to the downside. How quickly or when, I don't know. Nobody ever will know. I do know that on the daily, we are getting a fully confirmed short signal once again. We're getting a fully confirmed short signal once again. This would fall into the realm of a continuation signal. Minx has crossed below the noise line, which is generally our continuation signal when we're in bearish territory anyways. We do have now expanding volatility to the downside. And as you can see, what's really interesting to see here with Wadatar explosion, excuse me. What's really interesting here to see with Wadatar explosion is how low this level of volatility is. This level, we haven't really seen this level of low volatility. So hopefully you guys can see this. Let me try to expand this out. Look at where volatility is sitting right now. And we'll just circle that on the chart. Look at where volatility is sitting right now. And this is quite a zoomed out look right here. Look at where volatility is sitting right now. And look at the last time we saw volatility this low. Okay, now that I've circled that on the chart, I'm gonna hop back out and look at the live scene, and you can see the two main areas. Look at this massive consolidation that we obviously had when we broke down from November, and look at how low volatility is right now. What does that foretell? What does that lead to? Well, we know a couple fundamental things about volatility. When there's high volatility, there's attractiveness to trade. When there's good volatility in the market, when you have increasing volatility, if your directional bias is correct, then there's a lot of money to be made. And we also know that low volatility is what happens before high volatility. So what does that really mean in concrete terms? It means when you have a period of really tight consolidation, when you have a period of low volatility, naturally what happens after that is called market expansion, meaning that if your directional bias is correct, and of course there are phenomena in the market known as stop loss hunts, known as liquidity raids, where price will go in one direction on high volatility and grabs liquidity. This is institutional order flow theory, and then reverse and then move in the actual trending direction in the other way. And here's a key thing to point out. There's not a good, consistent way that's non-subjective to alleviate those problems. It's possible that, for example, that we have expanding volatility. Now, currently our directional bias is pointing us toward the downside. That's where my subjective bias is as well. It's to the downside. Now, it is possible that this is a big stop loss hunt. Again, 7.4K was a very important area. I talked about it for a long time. I've been talking about it for a long time. Again, 7.4K, 6.4K are the only two levels on the chart, are the only two lines, horizontal lines that I had on my chart when I was talking about levels of demand. Going back earlier, and some of the guys in the group might be aware of this as well, when I talked about my stank bid on Kraken, when I talked about my low bid, where was that at? 7.3, 7.4K. It's exactly where I said I would put it at. And again, for those of you who watch the show regularly, you will know that when we crossed under on the weekly, I said I was going to begin dollar cost averaging back into Bitcoin. And that's true. Every single week, I've purchased some Bitcoin to add to my cold storage. I've done that every single week. I call it Money Monday. Anyways, moving on from that. Continuing on from that. So it is possible that with our directional bias pointing to the downside and expanding volatility out of this realm, that we do see a stop loss hunt to the downside, that this does reverse to the upside and break out back above 8,000, breaks back up above 8,500, and we do get expansion to the upside. And the Moon Boys would be correct. We are 14K incoming, 16K incoming, 27 million K incoming. Who knows? It's actually not 27 million K. That'd be a much higher number, but 27 million incoming. Maybe John McAfee won't have to eat his own body part, but we don't have that data in front of us. And as I've said, when the market conditions are bearish, you are always looking to take the trade in the opposite direction because you're generally only going to be wrong in a big way. So incur like a regular size loss, because of course you've got your stop loss. You know exactly what percentage of your account you stand to lose whenever you enter into a trade when you utilize our risk management system. So you're only typically going to be wrong with that number. So price hitting your stop loss potentially, but of course, generally you're going to have an early exit before that, just about once. And that's when the trend reverses. Okay. And having the volatility filter generally keeps us out of consolidation and chop. Of course, the last daily trade that we took to the downside was a short that we had to end up exiting. Now, we talked yesterday. Well, before we get into the hourly, let's continue breaking down the daily, because it's very, very clear. I said all of that to actually just look at a couple data points here. Well, what do we have? We have Minx crossing back below the noise line. That is our primary momentum indicator that lets us know our directional bias. The directional bias is to the downside. We have commodity channel index, which we're utilizing on this stream, which is our longer term. It is a centered oscillator. It lets us know overall where price sits in bullish control or bearish control. Is the market conditions overall bullish, or are the market conditions overall bearish? And this is smooth. This is long term. It is bearish. It is pointing us to the downside. We also have expanding volatility. Now, one other indicator that I've thrown on here is Heikin-Ashi color change, because I want to go over that with you and go through a very simple way to take profit that does not require actually another momentum oscillator. Of course, you understand that Heikin-Ashi is based off momentum as well. But we'll be looking to exit trades when the Heikin-Ashi trend flips, when the color flips. So if you're in a short trade and Heikin-Ashi trend flips green, if you haven't gotten any other exit conditions or early exit situations, or if your trailing stop loss has not been hit, we're going to be looking to exit that position. Conversely, if we're long and we get a bearish or a red Heikin-Ashi color flip, we're going to look to exit our trade on that as well. I think that's a very simple. I utilize that for many, many years. I think it's one of the most simple, straightforward, and concrete ways to look at exits. In addition to our early exit system. So anyways, moving on from that, and it also gives us some nice bar color not repainting, but it paints over the bars. So we can actually look at OHLC bars here that are not going through the Heikin-Ashi formula, because again, Heikin-Ashi is OHLC4, a little different. As I've talked about Heikin-Ashi quite a bit, Heikin-Ashi's open is always the median of the previous candle. So whatever HL2 of the previous candle is, which is high plus low divided by 2, that's always going to be the open of Heikin-Ashi candle. And then it's I think it's open plus close plus high plus close divided by 4. It's not OHLC4. It's like CHCL4, something like that. Yeah. But moving on. So what does that mean? It means we have a full risk short trade on the daily close today, and we are seeing a little bit of a buyback. You can see the buybacks are actually fairly impressive on the lower time frames, and we'll talk about that when we get there. But on the daily, none of that matters. It means that the direction is down and that the opportunity and the trade is there to take a full risk trade to the downside. And if we initiate that trade on today's daily close, what are we going to be looking at? We're going to be looking at, let's see where our targets are going to be pointing us to. 70.97, 67.20, and 63.43, 63.49, which again is going to be pointing us ultimately right back down to that $6,400 area. Now, I'm not going to make any price predictions about price below 6,400. I want to see what happens when we get down there. My subjective opinion is less important than what my indicators and oscillators are saying at that point in time, because they give more consistent signals, they give more consistent results, and they're right when I'm wrong. I can only stand to be wrong so many times. But I digress. So so looking to the downside, that's the ultimate target is 6.4K. Are we going to get there tomorrow? Are we going to go there in the next week? Are we going to get there by this week? I don't know. Nobody knows the answer to that question. You never know when the movements will come like a thief in the night. You can try and make wide sweeping long ranging price predictions based on trend lines or blah, 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 or historical patterns. And to be quite honest with you, I've been doing this for a long time. I don't think that stuff really works very well. I rarely meet traders that trade that way and are consistently profitable. Almost every single trader that I know who is a professional trader or is a profitable trader, consistently profitable trader, they're not looking at these like huge wide-ranging data sets. Now, there is fundamentals, and that's a little bit different, but I don't even really call that trading. That's more like short-term investing, right? There's a difference between buying into value when it's cheap and then selling it when it's high when fundamentals switch. But that's a completely different realm of trading. We're technical traders, and over time we've seen more and more and more of the. I talk about this in the latest PTP module. If you look at what all the professional hedge funds are doing, if you look at what all the proprietary trading desks are doing, if you look at what they're all doing. They are almost entirely quantitative. They are almost entirely algorithmic. They are almost entirely purely technical. There is this, and again, I don't want to disagree with my man Anton Creel, but you have to understand Anton Creel grew up trading and working in a completely different market environment from where we're at now. This is 2020, baby, soon. And you know, he talks about how, and again, I love Anton Creel. I think his conversations are great, but he talks about how, you know, trading should be 20% technical and 80% fundamental. And that sounds good. But the reality of the situation is, if you look at the individuals that are employed by hedge funds and proprietary firms, prop desk, prop shops, however, whatever you want to call them, they're almost all quants and algos. They're almost all programmers. They're almost all quantitative analysts. So what does that mean? It means purely technical strategies and risk management are the most conducive to trading, produce the most consistent results, and that's exactly how we trade. Okay, moving directly on from that. Sorry, I know I waxed loquaciously, but it's just an interesting day. It's just an exciting day. Let's take a brief moment to pause and go through the chat. Eli back. Sorry, I didn't see the super chat, my good friend. Thank you so much for the $10, my good friend. Let's get a little bit of. Let me get a little bit of. Get a little bit of hype in the chat, man. Thank you so much for the $10 donation, my good friend. Highly appreciated. He says, took a 7% upside from Engine Coin, and I'm in at 1,400 on SolveCare. Looks like a bull flag to me. Any thoughts? SolveCare. Let's write that down, and I will look at that in just a little bit, my good friend. All right. Mr. Hut QC, good to see you. Nitin Soki, Fifth Ronan, and Haroon, good to see you guys in here this morning. Kendi, what's up, my friend? Kendi asks, as soon as I can get my Discord non-discordant, can I get on and get some hand-holding by someone as to how to get my cryptos into a paper wallet? We'd be happy to help you out with that, my friend. A lot of guys, a lot of helpful people in the chat channel, man. Mar Champa, good to see you in here, my friend. Matois Wensa, I think leverage trading has really killed Bitcoin. Leverage trading is what took us to 19.7K, my friend. All right. ACDC, good to you, my friend. He says, congratulations, your target price of 7,400 equals bullseye. How do you do that? Great job. Thank you. You know, just look, you know, again, it's not like I've made tons of calls that were wrong. So that's subjective. It does feel good to be vindicated once in a while, though. But I mean, I just looked at VPVR and I looked at where VPVR and I looked at where are logical stop loss placements below this area of consolidation. And we have this low right here. We have this order block right. You know, we talked about the order block. We also talked about the previous high from the consolidation prior to the November consolidation. Those are pretty much the only metrics. VPVR, that was the primary one. I just looked at VPVR and where's the highest volume by price. And it was 6.4K and 7.4K. And when I saw that there is horizontal structures that are tops and bottoms of markets, or tops and bottoms of Bitcoin's price at that point in time, that's why I point those levels out. Thank you, Hugo. Highly appreciate it, man. Should I call it Magic Monday money? DM had a great short today after getting wrecked all last week. Good to hear, my friend. Let's see here. XRP going to 6 cents. Woo! Silver giveaways. Satoshi Nakafomo, good to see you, my good friend. Boots and pants. Let's see here. I'm trying to see here what Satoshi Nakafomo says. Took a nasty hit today, brother. I'm sorry to hear that, man. There is always the next trade. Shake it off. Thank you so much, Wendy. That's a great comment. I would have lost 2 BTC if it wasn't for my auto margin replenishment. Wow. I don't know if that's a good thing or a bad thing. I need a little bit more context. Okay, let's get back into I want to talk about the LTFs on Bitcoin today. So I was talking to Midwest Attempts, who again is another analyst. You guys should definitely go check him out. He has a TA channel in our general Discord. You don't need to be a premium member. It's just there. It's public for everybody. He's very generous to post his ideas, his analysis, his thoughts, his trade setups. He's been a student and a friend for a while, and so I appreciate him doing that. He was talking about his system did get him in on the previous 12-hour close, and pretty much Bitcoin dumped immediately after that. So that was a great entry. Right around 7 o'clock this morning, my time. That's when the 12-hour candle closes. For me, it closes at 7 a.m., 7 p.m. Central Daylight Time. Again, that's about 0000 UTC time. It's obviously midnight on Universal Coordinated Time. Now, looking at my system, I actually don't have that 12-hour signal. The only thing that might be different here is Wadatar Explosion. Again, I'm not exactly sure what he's utilizing for a volatility filter, but I do see that Minx is crossing under on that exact candle. CCI is also crossing under on that exact candle, but we do not have rising volatility. So the 12-hour would not have caught it with this structure that I have on the chart. The 4-hour would have. Now, I do want to look at the 4-hour time frame. The 4-hour did give us a confirmed short signal on this candle right here. So this would have been the close. This is midnight Universal Coordinated Time on the 23rd of October. That's when the candle would have opened up. So again, excuse me, 7 p.m. my time on the 23rd would have been when that candle opened up, because TradingView data is displayed, or excuse me, the dates on TradingView candles are when the candle actually opens up, not when it closes. So that was a pretty good 4-hour signal. You would have had two candles of extremely low volatility following that, and then you would have caught this large candle to the downside. It's closed. There's no reason to exit the trade yet. The only reason I see to be exiting shorts would be if one was looking at subjective price action, because you're seeing this big wick down. And it depends on what time frame you're watching. I don't really have any strong comments or thoughts on that, nor should I. I don't really trade reversals. This is not really an area where I would be... Again, one could make the argument, well, we're at this pretty significant level of 7.4K. So a reversal trade may be justified. And it possibly could. There might be a fantastic trade on the table to take price from 7.4K up to about 7,800. That's about a $400 movement. And I can see that. I can see that. And I think that... you have to look at the market dynamics. If price stabs up to 7.8K, what would that naturally be? Unless we put in some extreme bullish signals on the chart here, or break above the hourly baseline, or depending on what time frame you're using, that would be perhaps an indication to go long. We'll know on the daily. It'll probably take us. Probably won't be until next week. So let's. What I mean is, if price reverses from here and starts moving up, right? On the daily, we're likely to not get a signal or be aware of that until sometime next week. I would expect, right? With how low price is from the baseline, with how much momentum we'd have to put in. Again, after tapping 7.4K, taking a daily reversal long, or at least a below baseline long, is something I would be okay with doing on Bitcoin. I'm generally okay with doing that on major dollar pairs, less so on alt BTC pairs, especially with alt BTC pairs. I really do want to see strong bullish trends on alt BTC pairs before I'm looking to take them long. But the possibility is there. But unless that happens, unless we do break above a baseline on a lower time frame, the hourly, or 7.8K, I would be looking for that movement as an opportunity to reshort. But again, we won't have confirmation. But conversely, we wouldn't have confirmation of an actual trend reversal until probably sometime next week. And that's okay, because that trend reversal, I've talked about this before. It's kind of the same concept, that I had when we were trading around 8,000. I said if price goes back up to 9,000 and we get a strong daily close above that, which is where the baseline was at, then it dropped down to 8.9K. If we get a nice strong signal above that baseline, with all of our indicators signaling to go long, I would be fairly bullish on that. And I would be looking for higher prices, significantly higher prices. But that's not the way the market has played out. We have had significant selling pressure to the downside, and I think that we do continue on to the downside, and perhaps not immediately. Perhaps we have another extended period of volatility. Bitcoin is prone to do that once in a while, or it has put in behavior that is indicative of that before. Where there's just sideways, and then pop to the downside, and then sideways, and then pop to the downside, and sideways, and then pop to the upside, and then dip back down to the downside. So and we can kind of see that it's almost exactly how Bitcoin's price played out over here. You know, pretty big move to the downside, sideways, pop to the upside, sideways, pop to the downside, sideways, pop to the downside, rather than, you know, long sustained trending movements. But again, on the hourly, the two good trades that were here, and I'm just looking at recent trading, I'm not trying to cherry pick. We have our baseline right here, and we do have a fully confirmed long signal here, about 1400. Take price to the upside right here, out on this candle. You pretty much captured that entire movement. Price goes sideways. You have no indication to be doing anything. You do take a short here, and then you're out pretty exactly at break-even price, to be quite honest with you. And again, that is also trading against the baseline. You don't really have another signal until over here. You're pretty much out of all this. And then here on the hourly, and this is the exact signal that I talked about yesterday, there was actually, so yesterday on the hourly, you could have taken a trade at 1700. Could have taken a trade at 1700. And then I think the one we talked about was this trade right here. This is the, if you guys will recall, this was the candle right during yesterday's show where we were talking about entering once the hourly closed, and then I actually kind of forgot to go back and talk about it while we were doing the show. But it did confirm short, and that was the hourly trade setup. When I actually concluded the show yesterday, I did take an hourly short, but on the hourly time frame, I did end up exiting right around here. And then by the time I was up and in front of my computer and ready to trade, this had already happened. So again, the only good time frame that did capture that was the 4 hour. The 4 hour also caught, let's see here, this trade right here. Boom to the upside, again, catching pretty much one good candle, and then there's nothing but consolidation until you have pretty strong trend flip to the downside. So let's restate that. On the daily, we'd be looking to enter into a full risk short tonight on today's daily close, on or around 7 p.m. CDT. On the 12-hour time frame, one should already be in a short position. On the 4-hour time frame, you should already be in a short position. On the hourly time frame, you would have entered into a short position on the close of the dump candle, and you actually would have snagged profit on this close right here, and your stop loss would be at break even. Other than that, I don't see anything. I'm not gonna come on stream and recommend that people take a reversal trade off of this area. I do see some merit in it. I do see some point. I don't really like to trade, as I've said, the first bounce. You don't want to buy the first bounce. I'd really like to see, if I were trading price action at this point in time, I wouldn't be blindly buying 7.4K. I would want to see price action evolve a little bit. I would want to see, price try to make a stab to the upside, fail, come back down into the consolidation zone, move back down, grab some more liquidity, move up, make a higher high, fall back, make a higher low, and then on that higher low, on the first really higher low after two higher highs, I would be interested to be looking to take that trade up to about 7.8, 7.9K. But that's about it. And I'm not trading price action at this point in time. So that's really all. It's really all I have to say about that. As it sits right now, the movement is largely over. I think that we should be having our eyes on the downside. Again, on the daily, we'll be taking a full risk short. And again, we talked about that already, looking at those downside targets, ultimately pointing us down to that 6.3, 6.4K area with stops at the 70-80 range and the 6,700 range on the way down there to take profit. And managing risk, honestly, pretty much at the top of this large candle, around 80.26. Now, I don't generally recommend that you use lower time frames for your early exit system because they are prone to more chop, but it is a potential that, because that's a scenario where your stop loss is pretty much at a full retreat of today's daily candle, so you need a bullish engulfing to basically retreat today's candle. I take the trades. I'm going to take the trade, but subjectively, I don't really like those for whatever reason. It doesn't really matter because I understand the probabilistic nature of my trading strategy, and I know that over time I make money. But something about setting a stop loss right at the open of the candle that I'm entering the trade on never makes me feel like all warm and fuzzy inside. Okay, so anyways, take that as you will. Take that as you guys will. Glenn, thanks so much for the subscription on YouTube, my good friend. Wow, these people are still dancing? Why did nobody tell me the people are still dancing? I need to set that as a not loop. That's what I need to do. Okay. If you speed up the dancers 1.5 times, they kind of look like they're fighting. Okay. So we're going to be looking at liquidations a little bit later today. It would be interesting to look at open interest, but I don't really have it set up to do that at this point in time. I don't really want to do the whole kind of struggling with tensor charts at this point in time. So we'll just leave it at that. Take some time to go look at the chat here. Dylan Saden, can we take a look at Link? Sure, man. We can take a look at Link in a little bit. Those dancers would go the whole stream if you let them. Jonathan W. So you're saying I shouldn't have dumped my Ethereum at 160, looking to see 90 in the next week or two. Well, I don't want to, I have no idea. That would be, I don't want to make comments on your trading decisions or your investment decisions without kind of a deeper knowledge of, what other positions you have, what your thesis is, what your role is, what your goal is. Now, something that I failed to point out, all these people are saying, oh, Justin, what, you're saying like you didn't capture this movement to the downside? Oh, I did, but with Ethereum. So I did have a full risk short in on Ethereum. Actually, on this latest wick down, just hit take profit 2 on that. Let's go look at Ethereum, as we can see. So yeah, been in Ethereum for a while. I've actually been in Ethereum since this candle right here. Let me go verify that, see what my average entry price is. Yeah, I took Ethereum short on the 16th of October. I had an average entry price of 175.20. So pretty good, exciting trade on Ethereum. I did make quite a few dojas on that today. Just right before the stream, ended up moving my stop loss to break even because we did hit take profit 1 on today's candle. And then on this latest hourly wick to the downside, we did end up hitting take profit 2. So depending on where today's daily candle closes, I might end up putting on a trailing stop loss and kind of be looking to potentially increase my position size. Not tonight, probably, because I don't want to overexpose myself to that risk, because I am going to be looking to enter into Bitcoin tonight to be looking for this movement to the downside. And it'd be interesting to see what kind of buyback we can get on Bitcoin, because the higher price that I can get in at, obviously the more attractive the downside exposure becomes. So that's kind of all I have to say about Ethereum. I would not be, and again, I know that this might be disconjuncted, but at the same time, we have to look at the technicals, and the technicals for Ethereum do not justify re-entering into the trade at this point in time, whereas Bitcoin does, because they are different assets. Now, they do tend to move in synchronicity, so I'm pretty comfortable to keep my Ethereum short open while I'm looking to enter into Bitcoin, following on the heels of that movement. And that's the nice thing. This is what I said this is what I said to the premium members this morning. This is the nice thing about the diversity of PTP and trading multiple assets, is that anybody who's utilizing the exact same indicator suite that I did in this particular example wasn't in a daily short for Bitcoin. But they were in a daily short for Ethereum. And we can see that Ethereum from open to close was about 7.09%, and on Bitcoin was about 7.0%. So you got the exact same trade. You got the exact same exposure to the downside. Ethereum coming through in the clutch and helping us out quite a bit. Let's look at EOS. EOS as well. EOS was a justified full risk short over here on this candle on the 20th of October. Let's see here. So depending on, there's been no full risk short for ZERP. No full risk short for ZERP. In fact, we are still above the baseline. A pretty big, massive move to the downside, right to the baseline. I'm not in an active position on XRP. I did take XRP BTC to the upside, closed that trade out in profit several days ago. So pretty much got out in this consolidation, but I don't really have any comments on XRP. There's no trade that's being signaled here on the old ZERP. And I don't think it was because I was very negative about XRP yesterday that it dumped. So thank you guys. I got some of those DMs, but I don't really think that's that's what's up. Let's see here. Emium. Okay, I slaughtered that. But thank you so much for the follow over there on Twitch, my good friend. Yeah, I definitely got to fix the recent events here that I have in OBS, because I do not see what people do on Twitch anymore. It is disconcerting. They aren't dancing, they're rioting because they forgot to set stop loss. Solvecare, Link, Basic Attention Token, and Doc. Okay. So we can go take a look at those. And Zao. Yeah, Wendy wanted to look at Zao. So let's go look at Zao first. And let's look at, so we will look at Zao, and then we'll go look at Forex. And then when we come back from break, we'll probably look at these altcoins. Actually, we need to look at, we need to look at Solvecare for Eli first. So let's look at Solvecare for Eli first. I don't think I can, yeah, I can look at it here on the, on the TradingView chart. Okay, so here's the thing. And this is going to preface everything that I talk about with altcoins. For whatever reason, the technicals on the chart, the altcoins, and it's kind of a mixed bag, but we have not seen a massive sell-off of the altcoins. Now, is it possible that it comes later on after people establish positions in Bitcoin? Yes, but typically when you see a massive movement like this, a big movement from Bitcoin, an almost double-digit percentage movement, you almost see altcoins just dump immediately. And we haven't seen that. We've actually seen them pretty much hold their levels. Now, their USD pairs are down a bit, obviously with Bitcoin moving down, but they're holding their SAT value quite well. And I think that means that we're going to have some good alt BTC trades coming up. So that for that reason, I'm holding all my alt BTC trades open. And honestly, the technicals agree with me because we haven't actually gotten strong exit signals from a technical perspective, which is good. Now, Solvecare, looking at Solvecare from a pure daily TA perspective, we did get a fully daily PTP long signal over here on the candle that would have opened up on the 17th. So the evening of the 16th, you would have entered into this trade. Looks like you probably would have hit all three of your take profit targets. Ding, ding, ding. Yep, you would have definitely hit all three of your take profit targets, and you would have exited yesterday. Now, we are looking for longs because price is above the baseline. Everything is bullish. We don't have expanding volatility anymore. And overall price is sideways, moving in consolidation. If I can see it hug this line of like 1322 for a while, it's currently trading at around 1393. I mean, the answer is you need to exit. The answer, in my opinion, from a technical perspective, is that the chart is signaling that if you were in the trade, this is the area where you need to be out of the trade from its most simplistic function. But if you are looking to be a little bit more speculative, you can hold your position open with your stop loss at break even. If you've taken some profit, I definitely think that you should take some profit. I sound like a broken record, but I always say the same thing. Make your trade. If you're going to take extra risk with your trade, and I can't stop you from doing that, but if you are going to, then ensure that your trade is in a no-loss situation. You never want to lose money because you're in a profitable situation, and then you decide to open yourself up to more risk. And you don't want to lose money because of that. Like if you've done everything correctly, you don't want to let your user error, like a user mistake, like you making a mistake, put what once was a profitable trade in a losing situation. My entire philosophy and methodology to trading is that if you just do consistently the correct thing over and over and over again, you will have good results. So, So I don't see a reentry signal here. Let's go down and look at the hourly and see if we can find anything a little bit more intraday. Now intraday, again, I want to go back and look at that run up. And we have the same scenario here. Here is a full PTP long signal on the hourly. We would take price up, probably hit a couple take profits here, exit here, and we would be looking for a reentry here. The hourly honestly did not do you a whole lot of justice. Hourly really didn't do you a whole lot of justice. The daily caught this breadth of movement far better. The hourly was just too volatile. You're getting too many exit signals on the hourly. And then you have some consolidation. And then this is a reverse. This is a this is a below baseline long. But if you took it, you would have done pretty well out right there. And I don't see anything. I really don't think that the 1 hour is doing us justice. The 2 hour did better. But right now, the 2 hour is also keeping us out. Looking at the 4 hour as well. Yeah, looking at the 4 hour did well also. The 4 hour, so the 4 hour got you in nicely here and kept you in until the top of the market, until the first rejection candle. And actually, I want to see, did we? Oh, you sneaky dog. We actually crossed under on Minx, so we would have actually sold the exact top of the market. We would have sold the exact top of the market, so that's beautiful. That is beautiful. 4 hour did a very good job on self-care. So did the daily. The daily and the 4 hour. So again, this is why I like the higher time frames on these altcoins, because they do tend to they allow you to stay in good trending movements, and they don't expose you to all the intraday volatility that you're going to get on altcoins. I don't know too many people who intraday trade altcoins and do very well with them. I know some, but not many. Failure rate is extremely high. So my suggestion on the daily would be to be out of your position. If you're not going to get out of your position, then make sure you take some profit, move your stop loss to break even, and look kind of for this reversal baseline setup, my friend. Okay, looking over at Zhao for Wendy. We're going to look at the CFD on Awanda, as we are prone to do. On the daily, we're not looking for longs. Zhao is winding up. It is coiling up. It honestly looks quite similar to Bitcoin. I'm not going to lie. And I don't really want to make any prognostications off of that because at the end of the day, it is quite simple. If we can go back and look for what was our last good signal on gold, it would have been this candle right here. We got entry on gold back on the 30th of May. This is actually the afternoon of the 29th because this candle opens up on the 30th. Is when you would have been entering. Taking this to the upside and out here, and then re-entry here. Caught the second leg of the trend here. And then here, entry into this last wave to the upside. And we have mostly, almost entirely been out of the market. Short trade here, got a couple candles of profit on Zhao. Yeah, I'm sorry, man. There's nothing here. Let's look at volatility on gold. Yeah, we're not at our supreme low. So every time we typically get down to around this level on volatility, we tend to have a pretty expansive movement. Directional bias would be to the downside. I'd actually have to be bearish on gold looking at this chart. I'd actually have to be bearish looking at gold. What do I need to see to be bullish? I need to see price above 1,500. I need to see price above 1,500 on Zhao. Gold spot, and I need to see CCI above the zero line, and I need to see rising volatility. If I get all of that, then there's a long trade on the table. But as it sits right now, I'd be looking for continuation longs, and we're getting set up for a continuation long because on today's daily close, Minx will be crossing above the noise line, meaning as soon as it crosses back down, we can look to take that continuation trade to the downside. Let's see here. Looking at Link. Link still looks good, man. Link still looks good. We have had so subjectively, so looking at price action, we have had somewhat of a failure to achieve because we have put in a lower high, but we did hold the baseline quite nicely, which is also basically just a retreat back up into the previous trading range that we're in. So we can see that price was previously trading in this range between $2.60 and $2 pretty much. And when we broke below $2 and we traded in this low range, consolidated, this was accumulation zone. We broke back up on high volatility, PTP giving us a nice long signal over here on the 1st of October, actually. And now we're back in this trading range. We're now back in this trading range and attempting to break out of it. So I think this is good. We're above the baseline. Price is looking good. We're moving in consolidation. I don't see an active trade on the table right now, but overall, I would be looking for longs. I'd be looking for longs. I would be looking for longs. Basic attention token. Let's go look over here on Bitfinex where we can get some dollar data. And again, basic attention token signaling for the long over here on the 4th of October. This is actually would have been the evening of the 3rd. Taking price up. We not the most profitable trade. Well, again, we would have ended up taking definitely some profit. Let's see here if we would have hit TP1 or TP2, what we would have hit. Entry here, we would have hit just TP1 on that trade and then out in profit, and then re-entry on this candle right here, which allows us to hit TP1 on this trade, and then re-entry right here, which allows us probably to hit TP1, TP2, maybe, no, not TP3. But this latest trade, we've had potentially about 3 trades on basic attention token since we broke above the baseline back on the 4th, really the evening of the 3rd when we would have wanted to take the trade. Yeah, you could have entered. No, you couldn't enter there. You could have entered here. And nothing telling you to exit. But again, your active trade on basic attention token right now should be in a no-loss situation. Should be in a no-loss situation because you would have entered on this candle, the candle that closed on the 20th. You would have entered on the evening of the 20th or the open of the 21st, so 7 p.m. at night, Central Daylight Time, midnight Universal Coordinated Time. And you would have already hit TP2 on this long wick to the upside. So stop loss at break even, stop loss right around, let's see, what is the actual close of this candle? About 21 cents, 0.21632. Looking at Doc. Doc, I feel exactly about Doc as I feel about Link. Again, not, we'll kind of take a look at what Doc does, but, and without speaking too much to what the guys in the group are doing, I like Doc. I've been talking about Doc for a while. I am in an active position on Doc. I don't see a reason to exit the trade at this point in time. Depends on kind of how the daily closes. The daily is telling me that I should consider or should get out of my trade, but I do have a fundamental bias toward altcoins holding these levels quite nicely. I see bullish expansion coming in from altcoins. That's something that I could potentially be wrong about, but again, I'm going to be holding my positions open on my altcoins at this point in time, especially seeing how well they've held their level valued against Bitcoin. And Ali specifically wants me to look at Doc USDT. Doc USDT, so from a dollar perspective, Doc has lost more against the dollar than it has against its SAT value, than against Bitcoin. In all reality, we got an exit signal yesterday and an exit signal today. Your stop loss didn't trigger, but again, I am feeling bullish on Doc. I think that this is good. We're above the baseline. CCI is largely above the zero line. We've had rising expansion. I think that we're largely in an uptrend on Doc. I mean, it is chopping and consolidating a lot. This is not a very clear, pronounced uptrend that we would want to see. But when we look at Bitcoin dominance dropping and when we look at overall altcoins doing well, altcoins tend to do well as a large basket, not in isolation. So I think there's 2 major possibilities, either specifically with your trade on Ali, if your stop loss, specifically with your trade Ali on Doc and altcoins in general, either, and again, there's really only 2 things that can happen. Either I'm wrong or either I'm right. And I'm willing to take that risk because I think that there's a lot of data right now that's showing that altcoins are set to continue their bullish expansion because they are largely bullish. All right. 174 people watching just on YouTube. So thank you guys so much. Highly appreciated. About 273 of you guys watching from across YouTube, Twitch, D Live, Facebook Live, and Roku with the Investor News Channel app. So thank you guys so much. If you guys want to support the show, if you like the content, make sure if you're watching on YouTube, highly appreciate it if you hit that subscribe button. And that's about it. Or give us a follow if you're over there on Twitch or D Live. Okay, got a few minutes until the break, so let's go look at Forex real quick. Aussie yen, nothing. Again, still looking for a reset, bullish on Aussie yen, but looking for a reset at this point in time. The Aussie Kiwi, now I didn't end up, we can go look at the Forex news calendar for today. There wasn't anything coming up, so everything was wide open. I could have been looking for positions on anything. But again, we talked about not entering into that Aussie Kiwi position. I did not enter into that Aussie Kiwi position. I did want to take a short on it yesterday. I did not end up doing that. I did take some other trades, but did not take that Aussie Kiwi trade. It did end up moving in my favor. It did end up moving to the downside. We do now have rising volatility. So again, let's look at the so we need to look at the calendar for tomorrow. So tomorrow, we have a pretty big day coming up for the euro, and for just for the euro, man. We've got a lot coming up tomorrow. We've got let's see, we've got French news, we've got German news, we've got the main refinancing rate, the monetary policy statement, we've got the European Central Bank press conference. I think if anybody is in active euro trades, they should probably be exiting them today, because you just don't want to be exposed to that volatility. Price can move in your favor, or price can move against your favor, and that makes the Aussie Kiwi a pretty safe hedge. So I actually am going to flag that blue and potentially be looking at the Aussie Kiwi to enter into a short on tonight's close. Similar for the Aussie CAD is not approving the trade to the downside, actually. So we will just pause on the Aussie CAD. Looking at the Aussie dollar, I am long on the Aussie dollar. I already took profit up here on this wick. I have my stop loss at break even. It has wicked down close to my stop loss, hasn't hit it yet, and I'm also not getting an exit signal. So it looks at this point in time that if price does continue moving down a little bit, that it'll just hit my break even stop loss. I'll exit the trade with profit, or that we do reverse from this area and put in another leg on the Aussie dollar. Let's see here. Canadian Swissy is actually going to be signaling along, which is kind of interesting based on that Aussie, which is good because the Aussie CAD was not signaling a strong signal. So this one is also going to go on my watch list for a trending long. We've been kind of consolidating and chopping in this range. And again, here's that same pattern that I talk about with price action, right? Where we've tested resistance multiple times. We've come down and held a higher low, higher than the median of our previous trading range. We can see that's exactly what happens right here. And now we're looking at a fully confirmed signal to take the Canadian Swissy to the upside. So I think that's a no-brainer. That probably means I won't be looking at other CAD long trades. CAD Yen put in a nice bullish signal. Of course, that was the week that I was sick, so I didn't actively take any Forex trades. I did not trade Forex while I was sick. Swissy Yen, bullish, but again, looking for a reset. We're going to go ahead and skip right over Euro pairs because we're not going to be trading Euros with tomorrow happening. Pound Kiwi is starting to set up for a short, but we're not quite there yet. Pound CAD, same thing. Pound Swissy is neutral. The Pound Yen is neutral. The pound, they're all topping out. So again, all of these pound trades, I need the indicators to reset. There's no trades to be taken at this point in time. The Kiwi dollar. Now, the Kiwi dollar, I didn't end up taking this trade when it signaled because there was dollar news coming out. Now, price did end up moving to the upside. The actual signal would have been actually right here on this candle. As soon as it broke above the baseline, got this nice trending signal on the Kiwi dollar to the upside. But it's just too past. I can't look at it. It is what it is. Kiwi CAD. I've had the Kiwi CAD long for a while. I just went long on the Kiwi CAD yesterday. Price it's not really doing anything. It's just hovering right there. So I am already long on the Kiwi CAD. Let's go back and look at that Canadian Swissy. I think that'll be a good exposure. I'll keep the Kiwi CAD long open and take the Canadian Swissy long, even though they're not directly converse, but Kiwi Swissy as well. Put in a nice long signal, actually. Kiwi Swissy put in a nice long signal over here. And the Kiwi Yen, I'm long on the Kiwi Yen also. Hit my first take profit target already and just letting the trade ride with my stop loss at break even. Dollar Swissy. Let's see here. And I didn't take the dollar Canadian when it signaled because of the dollar news coming out. It's just too far past my entry, so we'll just wait for re-entry opportunities kind of coming up into demand right now. Dollar Swissy, I am in a losing position on the dollar Swissy. This one looks like I will be getting out of the dollar Swissy today on today's candle close. Dollar Yen is neutral, nothing to do. Aussie Swissy, I am long on as well. So I do have a lot of exposure stacked against the Swissy. Let's see here. So since I'm going to be exiting the dollar Swissy, I am long on the Aussie Swissy and the Kiwi Swissy. So I'm going to have to consider that Canadian Swissy. But again, I don't want to ignore good signals. I don't really mind the exposure. The dollar yuan. Looking like a good breakdown short actually on today's close. So let's see if we can still grab this price action right where it's at before the daily close this afternoon. So we'll come back and take a look at this, and I'll keep you guys updated on that. It is 1:01, and we do need to take a break, guys. So with that being said, all right. Hey, guys, we're just going to give you guys a brief word here. San Francisco Blockchain Week is coming up in less than a week. On Sunday, my toes will be stepping onto an airplane and touching down in sunny California, San Francisco, California. I'll be there with the entire team. If you guys want to come out and meet me, meet the team, see the magic behind the show, maybe even do a live, whatever you guys want to do, we would be pleased to do that. On Wednesday, we're going to be meeting up with the community members from Kraken Cryptocurrency that are going to be attending the event. We're going to go get some drinks. We're going to get some food. It's going to be a fantastic time. And also because Wednesday there's not an event scheduled. That's just going to be the Career Blockchain Expo week. So if you are going to attend, make sure to let us know in the Discord. Love to meet you guys. Love to have some fun in real person. Also, if you guys are wanting to attend the San Francisco Blockchain Week event, and if you guys are not aware, there are so many people that are going to be there. Everybody from Vitalik Buterin to Mike Novogratz to Hester Pierce to, the Sunny Lou from VeChain. There's over 100 speakers. It's beyond amazing. It's beyond mind blowing. The people that are going to be there. We've already got some fantastic interviews set up. I'm going to be talking with. It is confirmed. I'm going to be talking with Max and Gareth from the Zilliqua team. I'm going to be talking to the CEO of the Binance IEO Kava, which is launching tomorrow. I'm going to be talking to, I got like a list of like 10 people that I'm already going to be interviewing and talking to, and waiting to schedule some other things right now. And I've got a little bit more time to do it too, because we'll just have to kind of handle on-site logistics as well. But it's going to be fantastic. We're going to be live streaming and trading while we're down there as well as bringing you coverage from the event, letting you guys know what's going on in the space. If you guys want to purchase tickets, there is a link down in the description below that will save you 15% off. Now, the tickets to the CESC event, which is Monday and Tuesday of next week, are sold out, but Epicenter, which is Thursday and Friday, are still good to go. So I recommend it. They're going to sell out quick, though, probably. So if you guys want those, I would recommend going and getting those. I tried to talk to people about getting CESC tickets last week, but they were already sold out last week. But anyways, that link is down there if you guys want to save some money off your ticket price. And if you do, make sure to get a hold of us so we know that you're going to be attending the event. With that being said, guys, we're going to take a quick commercial break. Don't go anywhere. When we come back, we're going to break down the news of the day, and we'll also look at some more of your user-submitted chart requests and hang out a little bit more, guys. I'll be right back. Hey, what's up, guys? Thanks for hanging throughout the show, and we are back in the live stream. Let's see if I missed anything, my good friend. Okay. Jonathan wanted to see the Ethereum chart. Sorry, I didn't see that before the break. But here is the Ethereum chart. I'll leave it on screen for a couple seconds here. All right, now let's break into the news of the day. We got quite a bit to talk about. And I did just get word during the break that I am going to have to potentially, I'm going to have to leave today's show a little early here in about a half hour. I've got a few appointments that got moved up to 2 o'clock. Okay, but the first thing that I want to talk about here is Libra in the news again. And I think, you know, it's really, really important. I don't want to beat this topic to a dead horse, but it's absolutely critical that we stay on top of this because this is the development in our space right now. This really is. This is something that we've never seen before and that we knew was coming, is this corporate coin, and we need to stay on top of this. We absolutely need to stay on top of this. Okay. So, here's the thing. I mean, we're all aware of if you guys are not aware, Mark Zuckerberg was in front of Congress and was put in front of the hot seat. So he appeared in front of the House Financial Services Committee this morning. And the reason for him being there was obviously to face questions on Facebook's plan to create a global digital currency that we know as Libra. Now, Zuckerberg released his prepared statement ahead of today's hearing, and that's what a lot of people were talking about yesterday. And he stated that he is willing to delay the launch of the cryptocurrency venture known as Libra amid the growing pushback from regulators and waning support from the original partners of the project. So it seems that Libra, at least according to Zuckerberg, did take a little bit more of a psychological hit from individuals like Visa and MasterCard diving off of the support train. Quoting directly from his prepared statement, he says, "I believe this is something that needs to get built, but I understand we're not the ideal messenger right now." He went on in his statement to argue that Libra would benefit millions of people by providing access to the banking system and that its development would only bolster America's financial leadership. And he assured representatives that the Libra payment system will not be launched until all U.S. regulators approve it and that the company supports delaying Libra's launch until U.S. regulatory concerns are addressed. So we see a little bit of a different take here. Than what we had seen previously from spokespeople from Libra. For example, the previous statements that we've gotten from the public facing of Libra, Kevin, who will actually be at San Francisco Blockchain Week, at the event, and I'm actually looking forward to hearing his presentation. They were far more gung-ho. They were far more, yeah, we're going to do this. Regulators are just kind of being scared, and we're going to push for this because this is all right. So this is apparently, excuse me. And we've been seeing this develop because last week we talked about the letters sent out to companies like Visa, MasterCard, Stripe from the United States senators, basically warning them that they would face reprisals from the government, from regulators, if they did not basically cut ties with Libra. Now, the letters didn't directly say that, but it would be impossible to read them any other way. And those letters are all over Twitter and confirmed. So it's pretty disgusting and ridiculous to see those letters coming from the government of the United States. I mean, it's, sometimes it just helps to take a fundamental step back, and you can see the pushback to things like Libra in the exact same way that you see the pushback to things like Bitcoin. And the only way, so let's go on this thought experiment for a second. The only way that, let's actually take another step back. So you kind of have two sides of the argument, right? And so the government side of the argument is that we have to do what we need to do to protect our citizens and to protect our economic hegemony or status in the world. And if that means that some liberties have to be shucked, well, then so be it. And believe it or not, in this world, in this society, in this environment where we're so polarized and the voices of people who strive and fight for liberty have never been louder, there is a wide swath, not only of the population, but of philosophy, of educated individuals who consider themselves philosophical, who agree with that statement. And that all goes back, for example, a good example here in the United States is the Federalist Papers by Alexander Hamilton, who argued for a strong central federal government. And he said, without a strong central government, it is unlikely that a nation is going to survive. It doesn't matter. He basically said, and I don't want to misrepresent, Alexander Hamilton here, because he's one of the authors, one of our founding fathers that I have read a lot of their documents and I look up to. But again, my summation, my takeaway from having read the Federalist Papers, and again, it's much more nuanced than that. So I don't want to misconstrue the Federalist Papers here because it's quite nuanced and there are dissenting opinions in the Federalist Papers. But if you look at Hamilton's writings and you look at a lot of trains of thought and you look at a lot of commentaries on Hamilton's writings, you'll see that this is a strong philosophical strain that underpins a lot of modern American governmental structure. Now, I would say that, in the last, several decades that we've seen the influx of other government structures in America, for example. But what I will say is that this concept that people who want to push for pure liberty and localized rights, this philosophy kind of laughs at that because it says that sounds good, but if you do not have a strong central authority, there is nothing to protect you from a better regulated, opposing central authority, right? So basically the argumentation there is that the idea of the settler mentality of, hey, we have very local regulation. We have a very weak central authority. We have a very weak federal government. And we just have militia and everything's fine. Hamilton's argument was that that's not going to work with a coordinated invasion from another unified nation. So the only way that we can counter that is by having our own central, strong, unified nation as well. And unfortunately, that means, but to him, not unfortunately, that means vesting power at the sake of liberty, because every time you give a central authority power, it comes at the expense of liberty. It is literally a sliding scale. If the individual has more liberty, central authority is weaker because it cannot. If individual liberty is greater, then central authority does not have the power to regulate or control the individual. If individual liberty is quite low, and that means that central authority is quite high because it means that central authority has the ability to regulate and control the individual. And we have seen a big flip from the founding of America in particular, and from other countries, again, America's kind of unique in being founded on this concept of liberty. Liberty, and we've seen the rise of centralized authority, which was kind of the dominant model across the world. So, prior to the Revolutionary War, and again, we had revolutions in other countries. You have the French Revolution and things of that nature, but I think it showcases this common track throughout humanity's history of the individual yearning for liberty and yearning to push against and reduce the power of regulated and central authority. But anyways, all that to say that there is a large swath of the population and a large swath of philosophical thought that does still to this day, even when the voice of liberty is so loud and so out there, especially with the media and with the internet and with this kind of message getting out there, there is still a large swath of the population that agrees with Hamilton's original assessment, which is that the strong central government is a necessary evil. That if we disempower, if we disenfranchise the federal government, the central authority, and this means all of its governmental agencies, that it will be overall net negative for the future of our democracy, for the future of our society, for the future of our nation state. And again, I think a lot of other countries are also predicated upon this same concept. Now, generally, and obviously, us generally in the cryptocurrency space are quite opposed to this type of philosophy. We highly value the individual sanctity of the human life. We highly value the individual power of the human being, of personal liberty over centralized authority, and we see the rampant danger of centralized authority and the need to decentralize power and the need to reduce the power and control and reach of the state. But that does not mean that is the dominant philosophy. And even in the cryptocurrency world, of course, and people watching the show are going to feel very torn and conflicted on these issues, but they are fundamental issues. And I kind of bring that up just to make you guys think about where we are with this. So basically, so kind of digressing from that kind of side venture there, what we are seeing here from Zuckerberg is the reality set in that the government is going to take drastic action to push back against Libra. And I guess my original concept and point was, from the perspective of a libertarian, the only way that centralized authority argument makes sense in regards to financial regulation, I mean, just think about it. It's very, very simple, and I don't want to make it is a very nuanced and complex topic, but just think about it. It's like you have look at the digital gold that's been brought down, look at the actions against cryptocurrency, look at the regulation against cryptocurrency, look at the regulation against precious metals trading and CFDs being banned in the United States. Look at every opportunity regulators have done. And as I said yesterday, regulation almost never benefits retail traders. It always benefits institutional traders. It never, ever, ever benefits or protects individual investors. For example, when Goldman Sachs, Lehman Brothers, when all of these individuals lost, JP Morgan Chase, when they all lost billions of dollars betting big on CDOs, on CFDs, when all of these things were happening, the regulators did not step in until afterwards. And who did they bail out? They didn't bail out the pension funds. They didn't bail out the individual investors that lost money by having their accounts managed by these fucking crooks. They bailed out the investment banks. They bailed out the commercial banks. They bailed them out and gave them grace for their bad behavior. So, and then what they went in and instituted was, Glass-Steagall and all these other actions, which really, which again just took opportunity away from individual retail investors or traders and empowered the investment banks and commercial banks to continue doing the exact same thing in a different form. So regulation is almost never there to actually effectively protect the individual investor from malfeasance or fraud. It always happens after the fact. Regulators are always reactionary after something crappy happens. And then they always step in and overcorrect in a way that now inhibits and limits the ability of the individual investor or retail trader to seek risk, to seek yield, to seek gain. But in a wider but from a wider perspective, like, are you going to tell me that the government's stance is that you are only allowed to use our currency that we centrally manage and control to do what you want to do as a human person? You're not allowed to make your own currency amongst your friends and trade that and have it marketable and let the market decide whether or not that's valuable or a good medium exchange. No. We're going to shut you down. We're going to throw you in a cage. We're going to send nice men with guns and batons to your house if you refuse to utilize the currency that we have full control over. And it's for your own good. It's for your protection. It's to protect you from malfeasance. What? Are you serious? Money is a mental construct that we utilize to trade value amongst one another. It is a medium exchange to replace the barter system. There is no coherent, philosophical, logical argument as to why human beings should not have the liberty to create their own monetary structures. The market will naturally move us toward a dominant currency. The only reason to have this level of scrutiny of individual financial systems, of individual currencies, is to maintain a certain economic hegemony and control over the individual. Again, maintaining high government and centralized control at the expense of individual liberty. And I've yet to hear a coherent framework that allows me to look at that situation any differently. And this is why all of this pushback against... So the reason why I'm so interested in the Libra case is not because I think that Libra is a better alternative than Bitcoin, not even in the slightest. I think that I am actually petrified to have a potential global currency, a global digital currency run by a company like Facebook, who makes their money off of selling your private information, who makes their money or who exercises their influence by censoring news, by censoring influencers that they don't agree with. It just gives them too much goddamn power. I don't think that Facebook's all bad. I think that there are probably a lot of good actors in Facebook, but in a whole, when you centralize that much control of information, personal and private information, and you also stand as the gatekeeper to what frame individuals view reality from, then you've been invested with too much power. Your actions stand to damage individual liberty too much. So what's really interesting about this, though, for me, is that it frames the insanity, the absolute insanity and nonsensical nature of the current monetary regime, of a government authority utilizing physical violence, which is the alternative to regulation. If you don't follow with regulation, they will send men with guns to your house. The end game of all government action is physical violence. That's what governments have. They have a monopoly on the use of force, right? Because if you don't agree with something that I say, or if I ask you to do something and you don't do it, and I try to use violence against you, I go to jail because that's me being bogus. But the government gets to utilize force against you if you don't do what they say, and that's totally fine. Why? Because they have a monopoly on the use of force. They can, for a long time, they were able to kill you. Now the death penalty has been outlawed in most states, but again, that's a controversial subject too. But you can just see the rank hypocrisy of this state of affairs. And it's absolutely ridiculous if you think about it from a philosophical perspective. Like, look, man, like we're just using money to trade value, right? So why can't I use what money I like? Why isn't any of your business? Well, because if they have control over the issuance of currency, they can control basically whatever they want. So anyways, I don't know if I want to get too far into this Libra thing. Let's see if we can find some. Let's see here. Patrick McHenry said, today is a trial on American innovation. Fair or not fair? You're here to answer for the digital age, addressing Mark Zuckerberg. And Zuckerberg said that the financial industry is stagnant. There is no digital financial architecture to support the innovation that we need. I don't know if Libra is going to work, but I believe in trying new things. And the reality is here, I've said this for a while, we are going to see a successful corporate coin. I don't think that there's a way around it. It's either, we're either going to get, and this is what this is highlighting for me. This is Mark Zuckerberg standing his ground, but also trying to communicate to Congress that, listen, guys, we want to push this Libra thing out, whatever it takes. However much we have to compromise, however much oversight or control you need to feel confident and comfortable, we'll do that. Okay, cool. So we're either going to see a corporate coin or a corporate company like Facebook toe the line enough to the federal government that they allow this global digital currency to be launched. And again, with Facebook's reach, with the convenience that I think it will offer a lot of people, I think we're going to see a lot of adoption of a successful corporate coin. Or we're not going to get the government to play ball on a corporate coin. They're going to shut it down. And unfortunately, there's not going to be a corporate coin that's going to have success or sustainable success or even be able to get off the ground without the government's approval. Now, something like Bitcoin or a true decentralized cryptocurrency does not need government's approval. But again, I think that trying to launch competition to Bitcoin in a decentralized manner now would be very difficult because now regulation is in place. Now the government is hip. They're onto us. They're onto us. Bitcoin was largely ignored by governments and nation states around the world, and that's why it was allowed to grow into such a powerful network. And that's why it's very, very difficult to shut down right now, even if governments wanted to. Now, I think that governments believe that they can, but they're also, unfortunately, I think, being too complacent because they're now butting up against emerging technology that allows full nodes to be run on phones. We just talked about HTC introducing full node cell phones yesterday, running into other technology that makes running a full node or even mining a significantly different process than it has been for the last decade of Bitcoin's existence. Their complacency, their belief that they can actually shut Bitcoin down has been their greatest error and the greatest godsend for Bitcoin, because while the government could have shut Bitcoin down earlier, if they continue to be complacent, there's a possibility that they could shut it down now in a really coordinated effort. But I don't think that's the track we're on. We'd have to see a massive reversal of sentiment around the world for all governments to strike a coordinated attack. And at the same time, you also run into the problem where Bitcoin is so big now and so successful that it only takes a few competing nation states to step in and be like, United States doesn't want to have Bitcoins back. We'll have Bitcoins back. Come at me, bro. We take Russia or China or any kind of unionization of any group of nation states. And is that going to be the catalyst for something like World War III? I don't know. I don't really want to get there with this conversation. That's not really the point of talking about this, and not really what I think is going to happen. I think that it seems clear to me that it's unlikely the government now makes a coordinated strike against Bitcoin. And if they continue to do that for 5 or so years, maybe even a couple years, technology grows quickly, exponentially. I don't think they'll ever be able to. I think they might not be able to now. As technology improves, as the network gets more and more decentralized, I don't think they can. They screwed up. They let the genie out of the bottle. And now the government's going to try and follow. So either we get a corporate coin that toes the line, but either way, the end game is not the corporate coin. The end game is going to be the central bank issued digital currency. And I think that that's going to be widely adopted. I think that the governments are going to phase out cash. Cash is going to be phased out in our lifetime. It's going to be illegal. Governments will make cash transactions illegal. And then they'll attempt to make cryptocurrency illegal. And we're going to have this big competition. I think we're going to see a battle like we haven't seen before between decentralized currency, Bitcoin, not any other currency, Bitcoin, Ethereum, Litecoin, all of these other things that I think may or may not be good investments. They have their place, but there's only one Bitcoin. Bitcoin is its stated purpose, its stated goal is to provide a medium of exchange that is decentralized and independent of government authority. And it's the only one that's out there being honest about that, being attractive about that, and actually putting boots to the ground and getting that done. So I think we're going to see a battle between centralized central bank digital assets and truly decentralized cryptocurrency, i.e. Bitcoin. I mean Bitcoin when I say that, because I have to state that over and over and over again, because otherwise we're going to get 50, 70, 80, 90 people in here talking about, well, what about this coin? Or what about this coin? No, Bitcoin, period. End of story. Bitcoin versus central bank digital assets. It's the only one that can put the Superman cape on, period. All these other cryptocurrencies have their own use cases. They might be good investments. They might appreciate in price. They might be highly usable. But there is only one Bitcoin, period. And there's not going to be a different, well, at least there's not one right now. There's not a different Bitcoin right now. There's not a successor to Bitcoin's throne right now. Because there's not a cryptocurrency out there that I think is trying to do what Bitcoin is trying to do, which is to blatantly stand against the centralized fiat authority systems. Most of these other coins are trying to operate within that same system, fortunately. Venture capitalism and investments and ICOs and IEOs. There's nothing wrong with that. There's nothing wrong with approaching this. For the love of God, I'm a fucking trader. But I am trying to think long term and look at the writings on the wall for what the world is going to experience, what the next big shakeup is going to experience, how governments are going to respond to this, what's going to be the straw that breaks the camel's back. And there's no other way this story ends. There's no other way this story ends. Governments want full monopoly over money. That will never change. Governments have always had full monopoly over money. They are not going to tolerate losing that power. They will not. They will actively strive, push, fight, kill, and jail. Civil war, doesn't matter. They want monetary control. They will never relinquish that willingly. They will never relinquish that voluntarily. And corporate coins, although I think that they will be successful if allowed to launch, will just be a transitory period between the government launching their own central bank digital assets. That's it. That is the end game. Central bank digital assets, cash is outlawed, every transaction monitored, recorded, logged in the digital ledger, all anonymous transactions outlawed, and then you only have two alternatives: decentralized anonymous cryptocurrency and fully centralized global digital central bank issued digital asset. And there is no other way the story ends but a battle. There's no other way the story ends, guys. I don't know if you've thought about this. But if you just think forward 20, 30, 40, 50, 100 years in the future, there is no other way. Once the Bitcoin white paper was written, anybody who thought of the logical conclusion of this story saw, okay, this ends in a battle between government and Bitcoin. And it's up to you. It's up to the decisions that you guys make. It's up to the conversations that you have with your friends, with your loved ones. It's up to the steps that you make that depend and influence how that story, which we call life on Earth right now, because we have power to change reality, we have power to change the future. Your decisions matter right now, today. Because this is the first time in humanity's history where we have the technology to significantly abolish one of the most destructive and corruptive powers centralized authority has ever had: control of money. We've never been able to do it before. This is our first real shot at this, people. So you have to ask, what side of history do you want to be on? All right. I think that's a good place to end. Hey guys, thank you so much for joining me for another exciting episode of Breaking Bitcoin. Sorry to cut it off early, but I got some appointments today. I still have some getting ready to do for leaving on Sunday for the San Francisco Blockchain Week event. And we got some trading to do, guys. So listen, guys, hop in the Discord, discord.crackingcryptocurrency.com. That's where all the action happens while we're not live on the show. It is more about the community. It's not about the show. You are all awesome people. Thank you guys so much for coming to the stream today. Thank you guys so much for the support. If you guys want to support the channel, make sure to hit the thumbs up button and subscribe with the bell if you have not already over on YouTube. And give us a follow over there on Twitch and DLive, guys. Highly appreciated. Thank you so much. If you guys have any questions, comments, opinions, sarcastic remarks, or death threats, please leave them in the comment section down below. I'll do my best to get back to you if it is germane to the conversation of the channel. And if you are a new, experienced, or aspiring trader, and it doesn't matter whether your goal is to be a full-time professional trader like myself, if you would like to earn passive income on the side, or if you would like to take control of your finances and seek financial freedom, check out premium.crackingcryptocurrency.com to learn how we do things, to learn how we build traders up with training and teach them how to build their own technical strategy from the ground up using our Pathways to Profit process, guys. Looking forward to seeing you guys in the channel. Looking forward to seeing you guys in the Discord. And that's about all I got, man. That's about all I got. Thank you guys so much for dealing with me today. So be good, be kind, trade safely, and I'll see you guys tomorrow to crack some more cryptocurrency. Bye-bye.